In this video, we're going to talk about Luminar, trading under the symbol LAZR. The purpose of today's video is to have an update on what happened to this company ever since the hype in the beginning, and also to attempt to retrieve any lessons we could have learned from the whole situation. Luminar is a startup making sensors for self-driving cars. It has been very popular among those holding EV vehicle stocks and then reached new highs in early 2021. I remember that people at the time were saying that, this company is the next great thing, that it's gonna have like every single big client under the sun, namely Tesla, NIO, Li Auto, even Lucid, so you name it. But as the month followed, the stock performance of the company began to follow the suit of other high-growth stocks, and that the sell-off lasted for far longer than the EV sell-off sequence. So why was it the case? Part of it has to do with the general distancing investors have been doing with future-oriented stocks or growth stocks, and more particularly EV stocks. It also has something to do with the fundamental threats and the increase of competition in that field. Of course, the overarching environment is also far from easy for those stocks, with the headwinds of systemic risks coming from Asia and the stock market possibly going through a cycle of serious corrections once again. As you go through YouTube channels talking about stocks, you may have heard something that sounds like this. We are investing in growth stocks because the prices reflect the current value, and we are betting on a substantial growth on its value in the future. Well, you see, for me, there is a fundamental flaw in that reasoning, in that the stock market reflects the present value of the company as well as the potential value it will have based on the current appreciations. In other words, it includes the future value as far as we can see it. Now, the EV stocks and their peripherals, if you will, are valued at a relatively high level, even if it's lower compared to the peaks back in late 2020 and even early 2021. This means that unless there are aspects that we are not aware of right now, chances are that the company will have similar valuations in the years to come unless something truly revolutionary happens. Another issue with the business model of Luminar is that it plans to sell its LiDAR equipment to auto manufacturers, assuming that they will actually go for this technology. And even if they do, many automakers already publicly stated that they will use in-house technologies instead of external companies. What this means is that Luminar's client base would be quite restricted and probably not have access to the more established companies as clients. It doesn't mean that they will not have any clients, of course. It just means that their potential business partners would be other fellow auto startups, because many of them would initially require the assistance of external companies before they figure out what they would wish to achieve. With that being said, there's also one last issue. The market considers now that there are other competitors in the sector, such as this company called AI, a company that just went public in the middle of August. So for investors who want to have exposure in the LiDAR market, it is now possible to do so with more choices. There's one more thing that may this time be going for Luminar, and that is the fact that over the past few days, the stock seems to have stopped going lower, which in itself, in my opinion, is kind of a significant progress, given the circumstances. So this may suggest that the market believes that Luminar may have found its floor, and unwilling to go further down. And if you wish to have some kind of exposure in the LiDAR sector, if you think that, either bigger companies will be willing to work with companies like Luminar, then it may be a good subdivision of the larger EV narrative. And the timing may be good to enter in that sector because the stocks are relatively cheap. And from the price action, we can see that the market doesn't believe that the shares deserve to go lower than where they are. Now, in order to keep the risks at an acceptable level, I would recommend to keep your exposure to below 0.5% of your portfolio because they are highly correlated with EV. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.